It's really a mixed bag, Scott. And today was driven by not only PayPal, but you also had SoFi come out, and they beat the top line. They missed on the bottom line, but the market's in the mode where they're optimistic about everything. Look, to me, with the exception of SoFi, we take some of the others like Affirm and the buy now, pay later companies. They all had major moves today. Affirm was up 13%. So I would say it's not the time to get in because they're still not making money, and the market will eventually focus on that again short term. There also are, despite rates going up, rates are still historically low. And right now, there's no real moat in the business. Furthermore, the banks have recently said, and they've said it long term, but now I think they mean it, is that they can compete with these companies. And then when you take companies like Celsius and Voyager and some of the others that are filing for bankruptcy, it gives you pause, or it should give you pause if you're a consumer, about going with companies that haven't been around for a long time, that are losing money, that have upside-down balance sheets, and just may not be there when you come to collect your dollars.
You're talking about some, highly selective ones that,
right.
I think we could say may have had overexposure in the crypto space, and that's in part where I wanted to go, and that maybe these stocks just needed, to get out of the froth, get the froth out from the top, and also the crypto crash is actually going to be good. It's going to focus more of these companies on where the real money is to be made, not the more speculative sides of the business, which obviously have had their moment here in the big crypto pullback. Maybe it focuses them more as they need it to be.
Yeah, and I think we're seeing that in Robinhood. But Robinhood, which made a lot of money from crypto and from stock trading, I wouldn't touch that stock right now. I think that was short covering. Where I would go to your point is, if I've been looking at it and PayPal, I still may buy it here, and you'd say, why? Well, they're making money. It's very profitable, number one. And number two, I've got a $15 billion buyback and an investor, Elliott, who can go in there and tell them what they've been doing wrong, which I think they've realized to this point, being more efficient. So to me, that's the most attractive of the lot, and a much different model than those that have benefited from crypto. PayPal also will have, I wouldn't call them real partnerships with MasterCard or Visa or other credit cards, but you can link them. So they have multiple levers they can pull to drive their business versus some of the others that lead with losses. So a lot of these are no different than the online gaming companies, where they have high CAC, customer acquisition costs, and I just don't think they'll be able to hold on to them. So the answer to your question is you have to be very, very selective, but as a group, I think that you're not going to see these moves going forward.
Weiss, I'll let you bounce. Get back out at the pool.